And welcome back to another video. This is CryptoKoinz with the latest crypto related news. We have a big article today. We have a lot of numbers and statistics. If you're not bullish on cryptocurrency after this article, I don't know what else will sell you. Let's not waste any time and get right into it. This article was released November 20th. 70% of BTC dormant for a year. 5 things to know in Bitcoin this week. Basically stating that 70% of Bitcoin has not moved. Bitcoin faces a slow grind after earlier brisk BTC price gains, but the ingredients for a sustained rally are there, market data suggests. Bitcoin starts Thanksgiving week in the United States with a return to $37,000 as bulls stubbornly refuse to loosen the grip. BTC price action remains tantalizingly near 18-month highs as another weekly close provides a fresh taste of bull market momentum. The largest cryptocurrency continues to hold onto reclaimed ground, and while upside has been slower than in previous weeks, BTC USD is up 7% month to date. How could the coming days shape up for Bitcoin? Macroeconomic data prints provide the opportunity for some snap volatility, while under the hood, the landscape when it comes to Bitcoin's network fundamentals is as rosy as it has ever been in 2023. At the same time, supply dynamics are surprising. Coins dormant for a year or more now make up over 70% of the supply for the first time, indicating a reluctance among long-term holders to sell the rip. Bitcoin holders have been holding over 70% of the supply in the past year. That's huge. No one wants to sell. They know this is the beginning. And people who have been accumulating Bitcoin in the past 2 years while we went to 15,000, they know that a big rally is coming and there is no need to sell right now. Bitcoin dominance is also staying strong, leading to hopes that a classic crypto bull market is once again in its early innings. Cointelegraph takes a look at these factors and more as part of the weekly rundown of all things moving BTC price action in the coming week. Bitcoin traders maintain BTC price retracement odds. Bitcoin delivered a suitably buoyant weekly close with a trip to $37,500, but subsequently failed to hold that level. In an ongoing expression of the difficulty of reclaiming higher ground as support, BTC price action is now back around the $37,000 mark as of November 20th, per data from Cointelegraph, Markets Pro, and TradingView. Considerable supply above a price and towards $40,000. Popular trader Skew noted in a part of his latest social media analysis, quote, "This will take persistent demand for spot BTC to crack, in my opinion. Bullish confirmation is seeing limit bids move up closer to price here. That would signal for higher prices and demand," end quote. With hours to go until the Wall Street open, the sense among some market participants is one of range-bound trading continuing for the short term. Quote, "Bitcoin clearly making a range construction here," end quote. Michael van de Poppe, founder and CEO of trading firm 8, told subscribers as the weekly candle completed. Quote, "Resistance at $38,000 while support at $33,000 to $34,500 is the one to watch for long entries. I think we'll sweep slightly lower, maybe slightly beneath $36,000 before we revisit highs. Needs to hold the trend." And in this chart, we can see that trend and his prediction drawn here in this chart. The concept of a retracement to test recent liquidity is nothing new. As Cointelegraph reported, downside targets include a trip to $33,000 and even below $31,000. Unlike its initial push to 18-month highs last week, however, Bitcoin market data shows a much calmer atmosphere among traders, with both open interest (OI) and funding rates staying neutral. Here's a tweet from Adan Crypto Trades at DAAN Crypto. Hashtag Bitcoin. Some shorts pushed out on the push before the weekly close. Overall open interest still quite low compared to a few weeks back. Funding rates neutral. And it shows a chart here of that open interest. BTC USD remains up 7% in November, modest gains, yet still the pair's best performing November month since 2020, per data from monitoring resource CoinGlass. Even though the sentiment isn't great, BTC is still up 5% more or less for the month of November. Popular trader Dan Crypto Trades commented on the performance. Quote, December tends to be a volatile month that puts in big numbers. Bound to see a turbulent end of the year, I think, end quote. And here's a chart of the Bitcoin monthly returns going back to 2013. Jobs Fed minutes lead short Thanksgiving macro week. Big week this week. Not only do we have Thanksgiving, we have a lot of macroeconomic events happening. U.S. Thanksgiving week is due to be characterized by a cool set of macroeconomic data releases and a period of relief for crypto traders. Jobless claims mark one of the highlights of the coming days. These set to release on November 22nd. While Bitcoin has overall become less susceptible to macro-induced volatility this year, unemployment surprises have nonetheless succeeded in injecting short-term momentum in the past. After last week's data prints showed U.S. inflation cooling faster than markets expected, however, markets participants are in wait-and-see mode ahead of the next decision on interest rates change due in mid-December. And here are some probabilities, some forecasts of the Fed rates for December, with a 99.8% anticipating that rates will stay between 525 and 550 basis points. Basically, no rate cuts next month. So far, consensus is practically unanimous on current levels remaining in place at the Federal Reserve's Federal Open Market Committee, FOMC, meeting. Per data from CME Group's FedWatch tool, the Fed will release the minutes of its previous FOMC meeting this week. This is a tweet from the Kobeissi letter, at Kobeissi letter, that's KOBEISSILETTER. And he tweeted some key events this week. Number 1, existing home sales data, that will be Tuesday. Number 2, Fed meeting minutes, that will be Tuesday. Number 3, core durable goods orders, that will be Wednesday. Number 4, initial jobless claims, that will be Wednesday. Number 5, U.S. markets close for Thanksgiving, that's Thursday, no news there. And number 6, U.S. markets close at 1 p.m. Eastern Time Friday, early close for the markets. Happy Thanksgiving. And that's what we have to look forward to this week that will impact the price action of crypto. Quote, short week, but still some important events to watch. The Fed meeting minutes will be in the spotlight. And quote, financial commentary resource, the Kobeissi letter, wrote in part of its weekly forecast. Analysts concerned over Bitcoin mining boom. Bitcoin network fundamentals remain at or near all-time highs. And depending on how the near-term BTC price action plays out, they may yet jump higher this week. Both hash rates and mining difficulty are in full bull mode. Analysts has concluded, having spent most of 2023 in a relentless uptrend with only minor retracements along the way. However, the optimistic status quo is not without its warning signs. In his latest quick take market update for on-chain analytics platform CryptoKoinz on November 19th, contributor Giga Sullivan noted that new hash rate highs have traditionally preceded a BTC price come down. Quote, this was no longer the case after 15th of September as the dominant BTC spot ETF rally took over and pushed BTC's price 30% plus up, end quote, he acknowledged. Despite this, there is still time for history to repeat itself, with the result potentially constituting a return towards the $30,000 mark. Quote, important to note is that we have another new high on hash rate 2 weeks ago that is sitting still within the usual time frame and usual pump before dump range, end quote. The update added, quote, most likely pullback target between 30 and 31,500. As Cointelegraph reported, one theory suggests that miners will be looking to increase BTC stockpiles in advance of the April 2024 halving, when the amount of BTC awarded to them per block is cut by 50%. Bitcoin's next automated difficulty readjustment is scheduled for November 25th and is currently expected to take difficulty only modestly higher by around 2% per data from monitoring resources BTC.com. Dominance fuels hopes of classic bull market. When it comes to Bitcoin versus altcoins, the classic market cap dominance surge, which characterizes early stages of the crypto bull market, remains in play. Bitcoin currently accounts for around 52.5% of the total crypto market cap, around 2% lower than at the start of the month, but still conspicuously higher than its year-to-date lows of near 40%. Quote, Bitcoin price dominance is finally back, at least for the time being, end quote. Research firm Sentiment wrote, and an update on the status quo last week. Quote, altcoins have been retracing on the tail end of the week after the past month's blistering halt rally. If the crowd begins to get worried and show FUD, fear, uncertainty, and doubt, however, we could see some quick price rebounds. Bitcoin traditionally advances prior to major altcoins, with small cap tokens bringing up the rear as excitement over price gains permeates crypto markets. For Dan Crypto Trades, the sequence of events should ideally continue to play out. Quote, best for Bitcoin and the overall market would be if Bitcoin dominance takes off again while BTC grinds up, he argued on November 17th. Quote, not enough liquidity yet to sustain the entire market moving at once. It's why we see these flushes so often as liquidity is spread too thin. Then when BTC has rallied, capital can flow back into alts to play catch up. The weaker ETH/BTC is the stronger BTC will be most of the time. End of quote. ETH/BTC returned to 0.05 BTC at the end of October, its lowest since mid-2022. Supply dormancy sets new record when it comes to long-term holder resolved to hodl beyond immediate price action. Few charts are arguably as bullish as dormant supply. From the perspective of its iteration showing the percentage of mined BTC, which has not moved in at least a year, the metric has now hit all-time highs. Over 70% of the supply has ignored any gains seen since the 2022 bear market bottom and remains in the same wallets. Quote, Bitcoin has gained 139% over the past year, and 70% of all BTC in circulation hasn't been sold/transferred. Caleb Franson, senior analyst at Cubic Analytics, responded. Quote, now that's conviction, end quote. And here is a chart of the Bitcoin's percent of supply last active 1+ year ago. And you can just see how much that supply is just not in circulation and continues to move higher. Franson referenced data from an on-chain analytics firm, Glassnode, uploaded to X by William Clement, co-founder of crypto research firm Reflexivity. As Cointelegraph reported, the area immediately below $40,000 could well represent a key profit-taking watershed for those Bitcoin investors who purchased BTC during 2021 run to current all-time highs. Now, this article covered a lot of different topics and a lot of events happening this week. Extremely bullish case for Bitcoin. We see 70% of supply being held by the big whales. Nobody's transferring, nobody's moving this money. And we're going to see big volume continue to come in as we approach the halving event in about 5 months. This article states that if you are a trader, $40,000 level is key for profit taking in the short term. We can see retracements going back down to close to $30,000 per Bitcoin. You can wait to buy that dip if you believe these levels. Overall, I'm just buying crypto related assets to buy and hold, not really trading. I think this boom, in my opinion, shouldn't be traded as often, and just hold strongly and add into those positions when you see massive dips. So if you enjoyed this video, make sure to hit the like and subscribe buttons down below. Make sure to follow, and I'll catch you guys on the next one.